All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. S&P 500 closing a new all-time high on the week, and it's clear that last week's action was mainly OPEX related. The major selling we saw last week generally just flushing out those calls and making them expire worthless. Volume, again, very light this week. It says we had 58 million shares traded on Friday. That was actually a bit padded. It was even lighter than that. A lot of that came in the last candle here, as you can see. 9 million shares going off. There was rebalancing, so a lot of that is due to that. You see the Russell 2000 here, the IWM, the same thing. And that's important to understand, because if we look here at the Russell, for instance, you have GameStop, AMC making up 10 of the 2 of the top 10 holdings of the Russell 2000. So that will change moving forward. So a lot of the performance in the Russell 2000 has been padded by the meme stocks. And as those stocks come in, which they ultimately will, I mean, we look at AMC here, eventually this is going back down to, $10, $15 a share. And GameStop, same thing, is eventually it's going back to, $20 or $40 a share. And as that happens, those funds are not going to want to be holding the Russell if it's going to be, if two of the top 10 equities in that are going to take 50, 60, 70% haircuts. So that rebalancing will change how the IWM trades, just as a benchmark moving forward. So just keep that in mind. Again, volume very light this week, and again, it's probably going to be very light next week as well, barring any geopolitical news. So I would say by Wednesday, Thursday, a lot of the major players in Wall Street are going to take time off to go on vacation. They're going to leave early. So if you're a trader, an active trader, this is not the week to be active. Unless there's major news, you don't want to be forcing trades this week. So just keep that in mind, that there's not going to be a whole lot going on. But so we'll go over the Nasdaq here also. Nasdaq, now we did have a bit of a rotation back into tech as yields came in, and then Q's making a new all-time high again on Thursday, and then closing lower yesterday. But it's weird, we have this kind of game of hot potato going on with the market, and it's really kind of based around yields. Again, the Q's getting a bit of a bid off the lower yield trade recently, but then Friday we had some news about a fourth stimulus check going out. Not part of the infrastructure bill, but it would be going on possibly a future bill. And again, this administration's not going to stop spending money, and eventually Wall Street's going to realize that. And because now the narrative is, they're not going to do any more stimulus, that after the infrastructure it's over. That's not even close to true. They're already talking about doing permanent UBI in some areas of the country, and that's kind of just going to be a beta test for the future, in my opinion. So, but yeah, so if yields start to creep back up to that 1.7 area, and we push through that, it's going to put pressure on tech. Again, that's why I'm bearish tech for the second half of the year. But in the short term, tech has held up, and we have to respect it. But you saw after that news came out, the Dow catching a bid here. Actually, this news came out on Thursday, actually. So Dow catching a bid, which has a lot of higher yield plays. Some of the Dow transports actually caught a bit of a bid. If we look here, you can tell right where it caught a bid, right in the afternoon on Thursday. But a lot of those high yield plays doing well now. Again, so it's kind of this hot potato of which way are we positioned based on yields, and it's kind of just moving back and forth, the rotation, so to say. But again, this correlation here with the Qs and that Bitcoin, we had that rising wedge. I said if we get above that, a lot of the time we see this happen with rising wedge patterns. You kind of break out of the top side and it looks like a breakout, and all the amateurs get on board and they go long, and then it immediately gets ripped back down. And then so with the correlation between Bitcoin and the Nasdaq and the Bitcoin and equity markets, it could play out here soon, maybe by the middle of the month. But yeah, so we're going to keep an eye on that. But overall, yeah, I'm not expecting too much action this week. Don't be surprised. My video next week is very short as well. it's, you know, it's not the type of environment you want to make too much out of the action in when the volume is this light and we're in the dog days of summer. But checking in on gold really quickly. So gold really weak here. I'm not impressed with the bounce that it had this week. You know, short term, this does not look very good. Look at the longer term picture. And actually, I did a video on this earlier this week. I did an update to the long-term technical analysis that I did a week or two ago. But basically, you can see if we are in this period like I think we are, you could essentially say that we had this flush out candle in 2008. We actually back tested this area here, and that came after making a lower low as well. So we made a series of 3 lower lows, and you know, yeah, this is a pretty ugly candle, but it's not the end of the world. You know, as long as it holds this double bottom area, everything's really fine. But I did an update on that. If you guys want to check that out, where I get more in depth. And then moving on over just to silver. Silver again, kind of same kind of deal here, but silver, the chart of silver, I like a lot more, honestly. You're still making these higher lows, and it's just in a much better technical position. You're still holding the 200 moving average, although I do expect it to come down and test this area around 2475 and this upsloping trend line here in the near future. So that could be an area you might want to use to accumulate. So that's but yeah, that's what I've got going on here in the precious metals. Honestly, yeah, just a lot of short-term pressure right now, but long-term they're holding up fine. So yeah, anyway, just going to wrap it up quickly again. Yeah, with the light volume and the lack of institutional participation, you don't want to make too much out of the action going on this week or even last week. So unless we get any major news. But with that said, you guys take care, and I will see you next week.